Very active couple of days on Capitol Hill for Chairman Powell.
Between the minutes and many members of the committee, that's all about that one word, many. It's like we're all kumbaya. We're all in agreement. Let's cut these rates.
And that was a key word, right? So we talked for hours and hours, but you were fixated on the word many. Tell me why that was important for the markets.
Well, so we forget quickly, but 2 meetings ago, Bullard dissented, and there was all of this discussion that there was dissent among members of the committee, and why was there all of this disagreement, and what would they do? And now it's obvious that they have made a protracted effort, because it was reiterated and echoed in the minutes that many are on the same page, including, of course, Powell, who's leading the charge. So we've gone from dissent and on the committee to absolute cohesion, and I think that markets are celebrating that. We had completely priced out a 50 basis point rate cut going into yesterday's statement, and now it's at a third.
Right.
All you have to do is get to 50%, basically. And we have 8 days left until the FOMC blackout. There's not much that anybody can say or do between now until the Fed is basically locked into whatever they're going to do on the 31st, because they can't say anything after blackout ends in 8 days.
And it was interesting because Chairman Powell, when he was asked about the jobs report and if that very strong number changed the Fed's opinion on what they had decided previously, and then they had the number, he said no. Do you think that's true?
He talked down, and he's right. There were over 300,000 people who took on second jobs. That was well over the headline number. We've seen average weekly earnings decline from a 4% growth rate in January to 2.7% as of June. We've seen temporary employment, which is a leading indicator, fall off. We've seen the average work week for production and supervisory workers begin to shrink. So all of the leading indicators tell you to fade that headline and begin to pay attention to the fact that the unemployment rate ticked up, but not necessarily for a good reason. And there are reasons that the New York Fed's recession probability index has popped up to the highest level in 12 years. Liz Ann Saunders, who's on CNBC very frequently, she and I have been going back and forth, that this is indicative of the fact that the Fed is actually going to be cutting rates for the right reason, for a fundamental recessionary type reason.
I don't know if you watch The Bachelor or Bachelorette, where they talk a lot about the right reason. That's so funny that you say that, because when I look at the economy, I can also see the glass half full.
Oh,
I mean, I can see the reasons for the glass half empty, but
I'm notorious for seeing the glass half empty, but you're right. Everything that you could put on the front page of a newspaper in America looks fantastic. You haven't seen the weak GDP print, even though the 3.2% in Q1 was mostly inventories. And that was companies panicking ahead of what they thought were going to be even more tariffs, trying to stockpile. But now they're choking on this inventory and they don't know what to do with it. And we're seeing demand fall off. And that's why these layoffs are starting to come in.
What about the global economy? I mean, this seems to be something that Powell is very focused on. Obviously, he's in charge of U.S. monetary policy, but we're very interconnected. We haven't talked about that yet. Do you think that's a main reason why the market's potentially pricing in a 50 basis?
Well, I think that, look, Western European car sales were down.
Yep.
China car sales were down for a 12th consecutive year-over-year month. We got that data out yesterday, and it just kind of went quietly into the night because everybody was so excited about Powell making the markets happy again. But the problem I think that the Fed faces is that if Draghi and then potentially Lagarde come in and continue to take rates into deeper and deeper negative territory, the Fed is competitively, even though they don't technically talk about the dollar, they're going to have to defend, they're going to have to make sure that the dollar doesn't get too strong as other countries start to take their rates deeper into negative territory. So the problem is we've only got 225 or so basis points to play with here before we get to our own zero bound.
Yeah, that's true. So he's going back today. Any expectations for what we may hear? Same message, same wording? I mean, how does he handle today?
He was so consistent throughout the day. It was all about uncertainty. It was all about things that he can't predict or know about. When pressed on difficult questions, he was actually asked about Judy Shelton, the Fed nominee. And whenever he's asked something he does not want to answer, he says outright, this is not my purview. So I think that there'll be a lot more drama that comes out of the second day of testimony, but I would expect for him to maintain they're independent, they're data dependent. He's not going to tell you which data it is. And that the uncertainty overhang and the potential global downdraft that is weighing on business investment. The one thing he mentioned yesterday was that business investment itself has started to get hurt. And so, and we saw that in the small business survey that came out on Tuesday morning. So I think that we will see a continued message from him that the markets are going to continue to enjoy.
It was very interesting testimony, I have to say, and I agree. When he didn't want to answer something, he was asking multiple ways about unemployment, or the federal minimum wage, rather, and he just said, "Look, that's in your camp, not mine."
He shadowboxed with the best of them yesterday, and it was intentional. And he's not going to reveal anything beyond, "Look, we've got July 31st coming up." I think they would prefer to just take December back. Take that one policy error back and call it a day and say, we're done. We're going to keep our 200 basis points of ammunition and move on. And hopefully we can do a rate hike next. I don't think that happens.